Hello and welcome. You're watching News 9. This is First Stick, and over here we cover stories from the world of stock markets over the next half an hour. Now, joining me in the studio is my colleague Shweta Kothari. Shweta,
Hello,
welcome.
good morning. Thank you, Suyash. Good morning. Not a very bright morning for markets today. Pairing most of its gains made over the last our last two earnings days. So down by about 0.6%.
You're absolutely right, Shweta. The Indian markets today opened sharply lower with Nifty opening below the 19,550 mark. Now, this is on the back of a negative handover from the US markets. Now, US markets closed sharply lower as well in Wednesday's session, down about 1 to 1.5%. All three indices corrected by 1 to 1.5%. Asian markets, on the other hand, Shweta, are also trading firmly lower this morning. Now, what caused this fresh decline? It was a spike in the 10-year treasury yields, which climbed above the 4.9% mark for the very first time since 2007. So, they are at a new 16-year high. Now, meanwhile, the average rate of the popular 30-year fixed mortgage has just hit the 8% mark, which is the highest level in nearly 23 years, Shweta. Now, Indian markets, since its opening, has seen some sort of a recovery. Nifty has, is currently hovering near the 19,550 mark. Sensex, on the other hand, is down about 0.67%, and it is trading below the 65,500 mark. Mid cap and the small cap indices, Shweta, are also trading lower. The Nifty Mid Cap 100 index is down about 0.5%. Now, this is as of 9:30 a.m. this morning. It is hovering around the 40,150 mark. Small cap index, on the other hand, is down about 0.26% as of 9:30 a.m. this morning and hovering just below the 13,000 mark. Now, all sectors are also trading in the red. And if we look at Nifty Bank, we have seen a sharp decline in Nifty Bank. Nifty Bank is down about 0.5%, and it is also trading below the 43,800 levels, which was seen as a make or break level for the index after its recent decline. Now, we have not seen that. Now, Bank Nifty is currently at around 43,660 levels, and we have not seen these kinds of levels since late August of this year. Other indices which are down as well are Nifty Metal. The Nifty Metal pack is down about 1.5% in the morning trade. FMCG is down about 0.5%. The IT pack is down about 0.4%. And the auto pack is also down about 0.4%.
What's dragging markets at this point, apart from the global markets that ended in red? So it's a rub-off impact of that. What is happening as far as indigenous earnings is concerned? We'll of course begin with FMCG earnings. Some of those results will come out today. But what's happening here? Macroeconomic picture in India, is that weighing in?
Shweta, as far as the Q2 earnings season is concerned, so far it has been in the it's been a mixed bag. Now, we are just entering the thick of the earnings season. We are in the second week. We have seen IT companies report their numbers, and I mean, if we
it's been a mixed bag.
It's been a mixed bag, and the way I am reading it, Q1. Compared to Q1, it looks like it's been more of the same. It's been, the revenue has come in muted, demand is muted, profitability is improving because of cost optimization efforts undertaken by the company. Raw material prices are coming down. That is helping the gross margins. So Q2 looks like a pretty much a repeat of Q1.
Okay.
Now, what we will obviously track is how the demand outlook is going forward in the next half of the financial year, and perhaps take cues from there how FY25 will look like.
All right, and it's essentially the expectation from Q2 is to be better than Q1 because earnings season kickstarts with festivities, and this time around festivities are a little delayed, as a result of which it is having an impact on the bottom line for a lot of companies. FMCG companies are expected to come out with their results starting today. What are the big expectations?
So, Shweta, as you rightly pointed out, FMCG companies are essentially kicking off their Q2 earnings season today. Now, as we discussed, it warrants a broader commentary on the entire segment. Now, as far as demand is concerned, Shweta, it is expected to remain stable, but we won't see any sort of a growth because the demand is only expected to return in the second half of the financial year. Now, this is also due to a base effect. If you remember, last time around, the festive season came in about 15-20 days early. So near the very end of the Q2, we saw some effects of that festive season coming in also in the results of the companies. However, this time around, festive season kicks in later. That's why in Q2 results, we won't see that impact coming from the earnings. Now, apart from that, the street is expecting a low to single digit volume growth. As a result, revenue is expected to come in lower for most of the companies. But when we're talking about the margins, Shweta, the margins are expected to expand substantially in cases of some of these companies, given that raw material prices have softened and the companies have worked on cost optimization efforts in the last couple of quarters. However, now to bring back that demand which has been lacking from the market, they have been spending rampantly on advertisements. As a result,
margins will take a hit.
Yeah, so because of that, margins are expected to, like, the
At least in the
elevated
third
spending
quarter.
on ads is expected to eat away from those margins. Now, the street will closely look the management commentary around the demand, both on the front of the impact which happened due to El Nino like conditions and the outlook in the H2. Because the earnings season, because the festive season and the wedding season is about to kick in. So will the demand revive in the second half of the year? We'll be tracking that closely from management guidance. Now, 3 companies are expected to come out with its Q2 results. Actually, in Nestle's case, it's Q3 results because they follow the calendar year.
Yes.
Now, HUL, now all 3 companies, I think we need to point out, all 3 companies are not really comparable. HUL, for instance, is in the business of personal care. Nestle is in the business of food and beverages. So broadly, I mean, both of them are consumer staple companies. But when it comes to ITC, the bulk of their revenue comes from the cigarettes business. So this is not a consumer staple. As a result, we can't really compare all 3 companies, side by side. But if we look at the results of, like, which company do you want to start with?
Let's start with ITC.
Definitely. Now, ITC is expected to, report.
We're the only stock that is doing well this morning.
And the ITC
and on the back of
been,
cigarette business.
On the back of cigarette business, exactly, Shweta, you got the point. And ITC has been one of those stocks which has, been on a fairy tale sort of a run in 2023 after the lull we saw in the past couple of years. And I think the stock is up about 30% or so. Now, coming back to the Q2 expectations,
could that be because of the demerger, the talks around demerger of the hotels business?
Yeah, and also there was a long period of time where, the share formed a base. We saw shifting of hands, weak hands left the stock, and we saw consolidation also, the mutual fund industry, the smart money coming into the stock, and that's why we have not seen any sort of a correction whenever there was a dip in ITC stock.
Right.
Now let's talk about the earnings. The Q2 revenue is expected to grow about 4.6% on a year-on-year basis. Now, demand, as I said, is expected to be low this time in the previous quarter. Net profit is expected to grow by about 10.5% on a quarter-on-quarter basis. Now, this will be on the back of sales of the cigarettes business, price hikes in some of the FMCG products, and strong demand from the in the hotel segment, as we are seeing a revival in the travel and tourism business. Margins, Shweta, are expected to come under pressure. Now, this will be due to slight increase in the price of some of the key raw materials, which are like sugar and wheat. Now, if we break down the ITC, ITC business, the cigarettes business is expected to grow at about 8.9% in terms of value. In terms of volume, it is expected to grow about 5%. FMCG sector is expected to grow in double digits by about 12% on a year-on-year basis. Hotel segment, on the other hand, is expected to post a strong uptick on a year-on-year basis, and it will see a jump of about 12.5%, and that is what the expectation is as far as ITC is concerned.
Sudip Bandyopadhyay is joining us, Group Chairman, Inditrade Capital. Sudip, thank you for taking time out. Before we come to the global macroeconomic environment and how Indian markets are reacting to a sharp decline in equities market in the US, let's first talk about earnings season. FMCG companies are going to announce their earnings, and we were just discussing ITC would perhaps expect better than others. The stock is up this morning. What are your big expectations? What would you be keenly eyeing as far as ITC is concerned?
Well, I think you guys were discussing that pretty much the volume growth is what is always watched keenly as far as ITC is concerned, cigarette volume growth. And as we all know, over the last almost 2 years now, they have been having a robust volume growth, and that has led to the stock moving up from 200 plus levels to 450 plus, around 450 plus levels. So obviously, this entire thing is driven by cigarette volume growth and, of course, value growth along with that. But one has to remember that ITC is different from other FMCG companies, which are into more, consumer-related products. This is a tobacco-driven company, and even now, I think about close to 80% of the profits do come from tobacco. So we have to keep that in mind. So I would put ITC in a different bucket, and an HUL, Dabur, Britannia, and pretty much Nestle, everybody else in a different bucket. Yes,
All
we
right.
do classify everybody under FMCG, but ITC is a different company. We must understand that.
Okay, okay. Let's then also talk about how other FMCG companies are going to, or what are their big expectations. Of course, HUL will also come out with its results.
Yes, Shweta. So the revenue growth will also be mild in the case of HUL. This will be because of of course, the late festive season, which is obviously going to kickstart in a month's time or so. Now, analysts expect the demand.
Come to think of it, the
Yeah.
festive season's kick started now with Navratras.
Yeah, but the demand really picks up around that Diwali, Dussehra sort of season.
And Dussehra is just about
Exactly.
10 days from
And
now.
I mean, Q2 is ended in September, so we won't really see the impact of
Right.
it really set in.
So
Probably,
the commentary
mid-month.
is keenly.
Commentary will be keenly eyed, both from on the front of festive and festive demand, as well as the wedding season demand, and what the impact of El Nino conditions was on the books of the companies. Now I'll just quickly run you through the expectations for HUL. Revenue is expected to grow at about 4% on a year-on-year basis. Net profit is expected to grow by about 6% also on a year-on-year basis. Gross margins, Shweta, are expected to see a significant bump up from the year ago period by about 300 basis points. Now this will be based on because of a decline in the raw material prices for the company, and also the cost optimization efforts undertaken by the company.
Right. Sudeep, the expectations on our screens at this point in time, revenue expected to grow 4%, net profit 6%, margins by 300 basis points. Are those numbers in line with what you're expecting from the Q2 results for
Also,
HUL?
what will you be expecting from the management side of things?
I think pretty much the numbers which you were displaying are pretty much on the expected lines. I think what is important is the margins are going to improve. Pretty much the cost pressure on raw materials have eased out, and that has led to margin expansion. Of course, we'll wait and watch to see the actual numbers. I think the biggest issue remains rural demand pickup, and we will definitely like to understand the management commentary around what they are foreseeing as far as rural demand is concerned. You guys talked about festive demand. Of course, that's going to be there. And as we all know, festive season has already kicked up. So they will be able to give a fair idea as far as festive. But I think rural demand is going to be the key as far as HUL and many other FMCG companies are concerned in the current quarter, which we are in, which is the Q3 and Q4. Now, remember, what we have been predicting is that rural demand will pick up pretty much on the back of the fact that, yes, there were a lot of challenges as far as monsoons are concerned, stop, start, and a whole lot of other things. But by and large, I think the rainfalls were in line with what we can call a normal monsoon. So eventually, I think we are expecting that things should fall in place. The other big factor is we are headed into major elections. Many major states are getting into election mode, and we have a central election coming in about 6 to 12 months time. So overall, I think there will be a lot of effort on part of the governments to ensure that a lot of money is put in the hands of rural population. Now, this can happen through multiple MSP intervention. It can happen through other means. So rural demand, we believe, will pick up, and Q3, Q4 for FMCG companies should be good. But the commentary around this will be very important for us to listen.
All right, rural demand essentially needs to pick up, and
we are expecting
FMCG companies
Mr.
will be eyeing
Bandyopadhyay
that.
is expecting a recovery by in the second half of the
Second
year.
half of the year.
So good guidance coming from Bandyopadhyay
Okay.
as far as FMCG pack is concerned. Another company that will come out with its Q3 results actually, because Nestle follows a calendar year. Nestle will also declare its September quarter results. The expectation is that the results will come in only after the market hours. But now looking at the numbers broadly, Shweta, revenue is expected to see a good bump up, like 12% on a year-on-year basis. Net profit is also expected to expand from the year ago period by about 20%, and gross margins are as per the street's expectations are expected to pick up by about 150 to 200 basis points, based on the slight decline that we are seeing in prices of raw materials such as barley, coffee and palm. However, sugar prices and milk price have been a pain point in the quarter gone by, so that perhaps will put some pressure on those gross margins of Nestle India.
All right, that is of course as far as FMCG pack is concerned. A lot of results expected today. We will keep tracking all those details, but let's quickly move on to what's happening in the country. By the way, you touched upon sugar and you touched upon raw products and how they're likely to get more expensive. Sudip, one of the stories that we continue to track here is by the way of India trying to meet its own food demand, raw material demand, by the way of an export curb on sugar, which is likely to be expanded beyond 31st of October. What are some of the key raw materials that India would have to wake up to and perhaps ban exports of in the long term? Rice exports, we know there is some easing of curbs. There are 10 more countries that India is going to allow exporters to export to. What are the other raw material that could perhaps be in shortage that country will have to manage internally?
Well, I think the three most sensitive raw material which any government in power will have to be very, very careful about is, you mentioned two of them, sugar, rice. The third one is pulses. I think these three, particularly one needs to be very, very careful about. Of course, there are others which are not that widely traded. That's onion as well as tomatoes. We have seen these raw material prices, inflation in these raw material prices, or vegetable or pulses prices have led to the governments losing a majority. So it's a very, very sensitive area. So I expect, and we have been seeing this already getting displayed in the market, that government is very, very careful about sugar. We understand that there is a bit of a production loss in Brazil, and because of that, sugar prices in international markets have gone up. So obviously, there is a tendency of Indian markets prices to go up and Indian producers to start trying to export. So obviously, this curve has come, and I'm sure this will get extended, as you're rightly predicting.
Okay.
Now, please go ahead.
Rice, as you guys have mentioned, I think things are looking a bit better, and probably the curbs imposed were a bit too premature, and that's probably going to get taken off. I will be extremely carefully watching the entire pulses scenario. There are stock limits already, they are imposed on multiple types of pulses, and probably they may get extended if the things don't look up.
Okay. Now, sir, there is a risk of sentiment in the global markets, which is obviously weighing on the emerging market pack. But, the macroeconomic data suggests that India remains relatively well insulated. So, I mean, in your mind, is India a safe haven among emerging markets?
Yeah, definitely is a safe haven. But I think the problem today, and what we have been witnessing in the last few days, is that geopolitical issue is leading to challenges on the crude oil front. Now, this is one thing which can ruin India's party. If the crude oil prices start rising, and that will be little disastrous for India, whether it's economy, whether it's balance of payments, whether it's capital markets. This is definitely not good news. So raw material prices remaining, crude oil prices remaining in the range between, let's say, 75 to 85 zone, I think is still manageable. But the moment it starts moving above this range, I think India gets into a lot of challenges.
So,
And
but
that's what we have to be cognizant of.
at what levels will you be really concerned? Because crude is currently hovering around that $91 barrel mark. What are the levels that we need to closely watch as far as the domestic markets are concerned?
Well, I think it's definitely that $95 level, which, once it starts hitting 95, and remember, these international commodities have a propensity to start swinging if there is a move towards, upper end of the band. So when you see a 91, you probably will see a 95. Similarly, when you see a 89, probably you will see an 85 also. So we have to be very, very careful at this stage, and pretty much that's what is getting played out in the market, out there. The Indian market correcting isn't only because US bond prices moving up, or what we are expecting the Fed chair to say today evening. Yeah, there are concerns on that. There are challenges there, but the primary concern for Indian, policymakers, capital market players, institutions is the oil price. I think that's the single largest factor which one needs to be careful of under the current geopolitical situation.
Now, so as you rightly pointed out, geopolitical concerns are at play. Now, the Israel-Hamas war, I think we are entering near the second week of it. What's the worst case scenario analysis, sir? I mean, if you could give us what sort of a correction can we expect in the worst case scenario in percentage terms?
I think this is an impossible question. None of us thought that Russia will,
Invade
attack
Ukraine.
Ukraine. None of us imagined suddenly Hamas will do what they did. So, this is, I think, beyond black swan. So, putting a prediction to it, very difficult. But I would probably, since you're asking, I would probably draw corollaries to the COVID, when COVID came. There was what we had. We all know what we had, what kind of market corrections we did see. So if there is some, disaster, something like that can once again happen. But having said that, as we had seen in case of COVID, that probably will become the biggest buying opportunity in some time to come. So, these extreme events make everybody risk averse, and a lot of selling comes in the market. But when things start cooling down, things start going back to normal or even better than normal in a very, very short span.
All right, too many black swan events, come to think of it, of late in the last 3 years. Sudip Bandyopadhyay, thank you very much, sir, for taking time out. Thank you for joining us here on News 9. But with that, it's a wrap on Newstick. We'll be right back.